identifying the trend 2.0. Just kind of touch up on things. The last video was done a while back, but wanted to update everybody on things that I'm doing now and my estimate and EMAs that I have going on now. And actually, like really identifying the trend simply and easily before we get into everything else inside the course. Okay? Remember, everything's all about the concept. So once you guys understand this concept first, then we could go on with the other things inside the course without an issue. All right. So mainly, you have three directions inside of the main trend. We have uptrend, downtrend, and consolidation range. All right. So uptrend, you have your higher high points and higher low points. For example, you have higher high, a higher low, a higher high, a higher low, a higher high, a higher low, a higher high, and then pretty much like right here, you have like a short-term break structure. But at the end of the day, this area that looks like a major move of break of structure, it wasn't really being shown on the higher time frames. Wait. Daily. So all right here was literally just like a higher low point on the higher time frame. So like at the end of the day, like I wouldn't really count it as like a major break of structure, but at the end of the day, like it's still considered as a low point, which is just a higher low point on a daily time frame. All right, so at the end of the day, like you're always gonna have noise and everything based off of the lower time frames, but that's why if you have noise on lower time frames, just zoom out to higher time frames, so pretty much clear up what's going on, like at a noisy area, so you can identify something a bit clearer. All right, so higher high points, higher low points on an uptrend, lower low points and lower high points on a downtrend, and I also actually use my estimated EMAs. So the estimated EMAs that I do use is the EMA 8 and SMA 18. To actually get these, we right click, go on insert indicator, and then I type in this moving, and then you're gonna see moving average exponential and moving average, which gives you your normal SMA, and your EMA is gonna be moving average exponential. So once those are actually put on, you insert these lengths or periods, 8 for EMA and 18 for SMA. And beyond there, like on uptrend, on higher high points, higher low points, I'm also going to be looking at my SMA and EMA just to make sure that the blue EMA is above the red EMA the entire time. And once you actually have a break of structure and everything else, then you're having lower low points and lower high points, as well as you're having the red SMA over the blue EMA the entire time on the downtrend. All right. So identifying the trend is not hard. It's literally common sense. If a trend is going down, you're on a downtrend. If a trend is going up, you're on an uptrend. And like I always try to go for higher time frames first. Bless me. I always try to go for higher time frames first because it kind of helps you clear up all the noise and everything that you might encounter on lower time frames. So if you have a noisy chart, go on a higher time frame just so you can see your overall trend a lot clearer. For example, this right here is the daily chart. You have your blue over the red, and you're in on overall uptrend. The market picking higher high, and like low points. So at the end of the day, like it's still on an overall uptrend. But on a bigger scale, such as the monthly chart and the weekly chart, you're in on just a consolidation range throughout this entire area. So a lot of this has to do with time frame correlation. You guys would actually understand all this a bit more throughout the entire course. But also, just understand the concept that you're actually getting on every single piece of video, and then at the end of the day, like you're gonna pretty much combine everything to actually give you confluence trading. All right, so every single period does have its own time frame that it looks best on. For example, on UJ, I like to go on H4. I see my higher high points and higher low points a lot clearer, as well as I like to actually identify my estimated EMAs on this time frame also, and on the daily time frame. So red over blue, overall downtrend, as well as lower low points and lower high points, and on uptrend, higher high points and higher low points, as well as the blue over the red SMA. All right. So this right here is just a quick updated version of my previous video, which was identifying the trend 1.0. This right here is going to be 2.0, as well as the updated SMA and EMAs. So hopefully you guys gain some quick knowledge on that. And yeah, I'll see you guys on the other videos. Peace out. Hey everybody, this is Quillen Black. Just wanted to update you guys on how I draw my support and resistance levels. This is right here. Well, you call this video support and resistance HD, a follow-up from the previous video, you could say. It's still like the way how I do it is still precise, but this right here is even more accurate, and more like in depth compared to the other one. Okay, so how I start this pretty much is this is my chart layout. Everybody should have everything set up already as far as like your EMA, your SMA, your ADX, which is done over phase 3, and this is the chart setup overall. Mainly the main chart I do stay on is the hour chart, 4-1, but when it comes to my markups, I always start off on the daily chart. Okay, daily chart first. Okay, and for one, okay, so on the daily, it's gonna be red. And these are the horizontal line colors also to kind of help you guys. H4 is gonna be green. H1 is gonna be orange, and randoms are, let's say, blue. Okay, I'll keep this right here just in case. Too high. I'll try to keep it like more of like where the price action is currently also, just to make things easier. Those are the colors though, keep that in mind. Okay, so the first thing I start off with is going on the line chart first, just so I can actually see like where the market is rejected a lot of the times compared to me being on the candlestick chart first. I'm on the line chart. I try to stay on the line chart only until like around the daily chart, the H4 chart, the H1 chart. I go back on the candlesticks, and then that's where I kind of just pinpoint certain things. Like I don't really see that much things on the H1 chart that I haven't already got from the H4 or the daily chart. Okay, so basically the H1 chart is like me just critiquing where everything is supposed to be. Okay, all right, so first things first, get your horizontal line out, make it red, and it kind of tells you as far as like what level of strength these horizontal lines have, just from you coloring it. I'm saying, so like you could say, oh yeah, oh my god, that's a daily chart support level or resistance level. You know what I'm saying, compared to you not having any kind of indication of like where did you actually place those support and resistance levels. Okay, so what I'm looking for pretty much is multiple touches of this line right here, as far as like a lot of indecision on like where the market struggled to pass. Okay, so as you can see, like this point right here, the market came down and touched, market came up and touched, market came down and touched, and it struggled like within this area right here clearly. Okay, so you gotta keep that part in mind, and just kind of just keep on going. Okay, multiple areas. All right, so this line struggled right here, came down right here. You can see it touched, came up right here, struggled. So you can mark that off as a resistance level. Okay, another one right there. Touch, 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 touch. Perfect. Okay. And like I tell everybody, like if you do a good markup, you could keep that markup for like about a week and a half or more. Just basically update your analysis as you go pretty much. You don't always have to redo your whole chart every single time. Okay, like I only cleared off my chart this time just to show you guys on how I actually do this from scratch, from blank. Okay, all right, again, struggled right here. See right here, and let's see one more. Yeah, you put like right there and call it a day. All right, so from there, go on H4 chart. H4 chart is gonna be what color, guys? Green. The green horizontal line. Okay, zoom in a bit. Once again, I'm looking for a lot of spikes, a lot of spike tips. 1, 2, 3. Struggle, 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 struggle. Okay, and I try to keep like how far I do them as close to price action as possible. Seeing that the market was in a range within this whole area right here, I'll consider that as relevant. while I'm doing this whole process right here. Everything has to be relevant. You can't, don't go back and just try to mark off levels from like 6, 8 months ago. You know what I'm saying? Just mark it off as far as like where the current price is relevant. This right here is too far back. This all right here is irrelevant, irrelevant, irrelevant. Down here the market was in a range. So I mean like every aspect within this area is relevant to like what I'm doing currently right here, right now pretty much. Okay. Green. Perfect. Find all these areas of indecision. And if you see like any kind of big gaps between a support level or resistance level, more than likely there is a level that you're missing within that area right there, because more than likely there aren't supposed to be like huge gaps. I'm saying like the market always struggles in certain areas, and a lot of times there is no like a big gap type thing. So just make sure you're doing everything correctly. So I'm looking for the most amount of indecision areas. Let's say. And to make things even clearer, probably you want to take off your EMA SMAs. Okay. Right there. Okay, so from there, go on the H1 chart. The H1 chart, I'm not gonna really do too much honestly. Let's just switch back to our candlestick chart. And on this chart, like let's start critiquing with the orange. Okay. Okay. Seeing that this right here was based off the H1 chart, try to touch as much candles, I mean wicks as possible within this area right here. Okay. So as you can see over here, everything was respected. Struggled over there, came back over here, touched, came back over here, touched, then dropped. On this bottom area right here, try once again, try to make it touch as much wicks as possible. So I'll leave it right here, mainly because this right here is a median. In this area, you can say right here. I don't want to do it all the way down here. I could, but I want to keep in mind that this right here is a median of like this was touched the most amount of times by the wicks wise. Okay. And remember, this is support and resistance HD. Very, very in-depth. Okay, once again. This right here was median. That was the median. Right here was the median. Perfect. So I kind of zoomed in a bit. Try to make it touch all three candles right here, all three wicks, matter of fact. As I scroll over, I'll see that everything was respected perfectly. Okay. All right. And see how like these major areas up here are all red? Those were all done on a daily chart. So when the market gets within that range, um, just be alert. Be very, very alert. Meaning that like there's a high chance of reversals within those areas inside the market. Okay. Right here, just find a median within this area. Touch as many wicks as possible. Okay, perfect. Scroll over here, scroll over here. Perfect. Remember, this is all just to start off your markups. Very, very important, guys. Just to kind of tell you of like what level of support you see within the market, which is very, very important, mainly because on the daily chart ones, it's more than likely it's going to reverse compared to like a lower time frame. Okay, so these right here are very, very important. Um, that's about it. If you zoom back out on the 4-hour chart, it seems kind of crazy, but as you zoom into the market, it seems more clear. It's not really as cluttered, and there's no like certain amount that you have to actually have on your chart. Just try to catch all the major points that the market has, as far as all the swings in the market. You know what I'm saying? Because everything is relevant within this range that I drew everything on. Um, and it's not as cluttered as some people might make it seem. Honestly, if it's making you money, then trust me, it's definitely worth it, worth time to actually mark everything off and have everything as accurate as possible. Okay, this right here was a head and shoulder pattern drop. It broke daily support or daily resistance, you could say. Um, and yeah, just perfect, man. Came up perfect. Everything's critiquing. Okay, so this right here is support and resistance HD. You should already know, like after this, you start doing supply and demand zones and start really get in depth with the other things that I taught you guys also. So see you guys on the next video. Hope you guys like this video to get your markups a little better, a little bit more accurate, and catch a lot of bomb ass setups. All right, peace out. Okay, on this video, I'll be showing you guys how to draw your support and resistance levels. Keep in mind, support means when a market finds a certain floor that it tries to respect. That's very important to actually identifying market structure and so on, and knowing when the market has found a floor, so you could look for some sort of counter trend to some extent. And resistance, which is like a ceiling for when a market, it finds a high price that it wants to actually test and respect. Really important to market structure as well. So when you do come onto market structure for the next video, actually the next section, actually phase 2, you'll see that only on higher high points, higher low points, lower high points, and lower low points, you're going to be seeing tested candles along these areas. Okay, and this method right here is going to definitely help you out onto spotting where the market is going to be, finding some sort of indecision. Okay, so I have 3 situations right here: the touch, which is when it does this right here; the gap, it looks like this; and the overlap, which looks like this. All this is done on a line chart like this. Okay, and I'll be showing you guys a few examples and running through the entire chart. Okay, and we're only doing this based off of only only daily and H4. Okay, only daily and H4 period. So let's start on the daily time frame. Everybody just take some time to copy this down before I erase it real quick. 1, 2, 3. All right, so let's start on a daily time frame. So for these right here, make sure your horizontal lines are going to be red. So these are the lines that we're going to be plotting on this entire area for the daily time frame. Once we actually have a situation that we actually did a 1, 2, or 3, which was the gap, touch, or the overlap. So start from the top of my market itself. All right, and I'm looking for one of 3 situations. So this right here is one situation that I found over here, and you can look across the whole entire price scale to see like where the market is going to be doing one of 3 situations. So this right here is a situation one, which was the touch. As you can see, the touch right there, touch right there. It acted as support and acted as resistance. When you see something like this, where is it? This, if it hits like this and only on one side, then that is invalid. That's invalid. Invalid, invalid. It has to act on both sides as support and resistance, or vice versa. It doesn't really matter, honestly, but as long as it hits both sides to make it be considered as an indecision level. Oh, I get a little messy. Okay, so that's our first one. Then we continue from where we left off from. Start scrolling down again. So this right here could be considered as an overlap. Here. And here. Okay. This right here is considered as a gap. Here. And here. Continue. You're looking from left to right. Like, use your eyes and just scan the entire line that you're currently on. I like to keep my crosshair tool a little bit dark so I see the actual line before I actually plot it. Okay, and this is how these areas look on the actual candlesticks. You'll see that indecision, tested, 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 tested candles, and you're seeing these areas all over the place. Once you actually do them correctly, it'll give you like a really, really, really precise level of support and level of resistance. That's another line, and look at how it looks on candlesticks. Once again, support, tested, tested, along those entire areas. And you can do this throughout your entire chart if you want to also, or just like in like a nice price range, like 1,000, 2,000 pip range, just so you know you cover a good amount of area at least. Or a lot more than that actually. It's gonna be probably like what, 5,000, 10,000 pip range. Just like a real nice big zone, okay? So once we get back on the daily chart, I mean the H4 chart actually, H4 chart is going to be the same concept, but it's going to be a lot more details that you're going to be seeing on this time frame than the other time frame to actually plot your indecision levels. On this one, it's going to be a dark green line like that. Don't use this line, okay? That's incorrect. Use a dark green line. And we're doing the same concept starting from the top, but we don't have to zoom all the way out like how we did last time because we just want to see where is the market now, and we want to see these fluctuations. That's what we want to see. So as I start scrolling down, start from the top once again, start scrolling down and start looking for major areas of indecision. So this one right here was one, I could probably spot like a gap, 1, 2, that little spike down right there, that little spike up right there. Candlesticks, you'll see those areas was respected to some extent. So definitely an area of indecision itself. And you only want to plot 1, 2, max 3 areas of support and resistance when it comes to this time frame. Okay, so 1, 2, max 3 areas. So continue from where I left off from again and start scrolling once again. This right here is another situation. I have a gap situation right here, 1, 2. This spike down, this spike up. And then I could plot probably one more before I'm done and I'm maxed out of my lines. That's one right there. It's a gap, 1, 2. I can use that also. This is how it looks on back on candlesticks. So you'll see a bit of an indecision area when the market does come close to these areas. You're going to see tested candles. You're going to see candles that kind of consolidate. Um, you know, so you see the market when it tries to slow down in price itself. Now down here, this zone, scrolling down slowly, scrolling down slowly. It's a gap, 1, 2. That's a gap. Sorry, it's an overlap, 1, 2. And try to make everything even. It has to be overlapped the same length over on each part of the line. And probably get one more out of here. Another gap right there. 1, 2. Okay. A lot of times when the market is kind of far away from those areas, like how it is on the gaps, like all right here is literally wicks because the line chart only measures close prices itself. So you could possibly see a wick on those areas that you have gaps. That's another one. Situation 1, 1, 2. A direct touch. Continue again. So this one was pretty good. It had a touch right there, it had a touch right there, and also had a gap, which was right here and right here. So it definitely counts as a level of indecision also. And yeah, line chart on this line. Okay, you see the touch right there, you see the gaps. So the market itself found indecision when it came to this zone right here. It kind of gets a little stagnant for a while, tested areas. You're gonna see all this when you actually have these areas on your chart. And 3. I have a gap right there. 1, 2. The most accurate one that you can actually draw is going to be the situation ones are the ones that actually touch. Okay, the touch is the most accurate one that you can draw out of all of them. The gap and overlap you have to actually put on the median areas to make sure everything's even on both sides to make it super valid. Let me just do one more. The market is literally on one of these zones right now. At a gap, 1, 2. Okay, and you possibly get a touch also, which was right here, this touch, and on the upside, this touch. So that counts as definitely an indecision level itself. One, two candlesticks. That's how you see. You see a break of support, that retest, which forms a new lower high point, and then drop again. pure resistance, break of support. So you having these areas on your chart is definitely going to help you out to actually, spot setups, spot where the market can find levels of support, levels of resistance, the momentum change. And this is the one area also on the higher time frame that we actually plotted. The market, is finding some sort of support there also. So I mean, is definitely going to be a major factor when it comes down to plotting these correctly, because if you plot these correctly, you're spotting possible setups every single day. It might not be long term, or it could be short term at times, but it could definitely give you setups every single day if you're plotting these correctly. And you could definitely leave these on your charts for a couple weeks, 2-3 weeks, and they're still all valid. Mainly because you're basing them off of a higher time frame itself. Okay, and unlike the old videos, I don't do H1 anymore, mainly because H1 is a bit too noisy at times. You can still use it for analyzing, yes, but I use the random line, which is going to be a random blue trend line that I can just plot in random ass places that I just come across when I'm in the market. Like, let's say if I was on this uptrend right here, and I see a point of resistance or a point of support that the market might actually create that I never had plotted before, I could just use my random line and just say, okay, that was probably support, or the market was testing along these areas right here. You could put it on almost anything. You have like no kind of principles when you're actually doing these lines. Yeah, you can use it to draw your trend lines. It's in the sell zone, buy zone. Anything that you're pretty much trying to monitor on the charts itself, you can use your random line for. Level of resistance. So call this random line. Yeah, so they could literally be used for anything. So I don't use the H1 support and resistance too much anymore, but I do use my random lines to pretty much plot areas on the H1 time frame that I do find important. So that's about it for support and resistance. And now this is support resistance 2.0. So yeah, peace out, guys. What's going on, everybody? Okay, so in this video, we're going to talk about supply and demand. And let me just write it right here. And this is going to be drawn basically how to draw supply and demand zones and how it could benefit you when identifying reversal points inside the market. Supply and demand. Now, as you can see, the market pushed up a bit more from the last video that I showed you guys. It was trying to push up to the next resistance point, which was right here. Okay, so what is supply and demand? Okay, pretty much it's similar to support and resistance, but you could kind of consider it like a level 2 compared to support and resistance. But right here, I pretty much explain how different it is and how it could help you. Okay, so support and resistance is where we see a lot of failed attempts for price to move beyond. A very classic idea that a lot of people recognize. Supply and demand is a much deeper idea, though. We're not looking for a line where price had trouble moving through. We're looking for an area of strong price movement away from a zone of price action. My favorite of these areas, for example, are where we saw a very strong rally, a little bit of sideways movement as buyers and sellers came to a temporary equilibrium, and then a massive drop once all the buyers were filled and the sellers were left. The result, a zone where we have a good idea there aren't going to be much buyers, probably quite a few sellers remaining. Simple support and resistance cannot offer you this kind of insight, okay? And it's very, very helpful when it comes to you breaking down your chart and seeing what the market is trying to do, okay? So pretty much to draw your supply and demand zones, pretty much supply is basically on the other side of resistance. Demand zone is towards the bottom area. So we can draw it right here. Supply, let's say resistance, demand, support. Okay. And these are zones. These are not just like lines like this right here. This right here is one line. This right here is one price. This is a resistance point and everything. So if I wanted to draw a supply zone, pretty much what I do, I look for all breakouts as far as when the market breaks out in the other direction. And to draw these zones, pretty much what I do is I find out a breakout. So this right here was a breakout to the downside. So how I draw them is draw them from the previous candle's wick down to the breakout candle's body. The breakout candle body is basically the direction that it's moving in. So since it's a downtrend after this, you're looking for a bearish breakout candle body. So I draw it from the top of this previous wick down to the breakout candle's body, which is this red body right here, and then you just drag it across. And as you can see, price was inflicted upon it just based off this zone. Okay, as you can see, it was rejected once it came inside the zone right here. Okay, and that's one way how to draw them. And let me draw a few more for you guys. And always draw these on either the 4-hour chart or the 1-hour chart. So previous wick to breakout candle's body once again. And the market always, more than likely, always rejects the first time it hits one of these zones, you know? So like, as you can see, it came right here, it came up, it got rejected. And I can show you guys these 1,000 times, honestly, inside the market. So, previous wick, breakout candle's body. Okay, came up, it got rejected again. And in this area right here, there's a lot of supply and demand zones just based off of like all the rallies and everything that was happening inside this area. So if I did it to the downside now, I'm going to hour chart. So there's a little demand zone. As you can see, it was rejected right here. And circle around this. So once again, you see a rejection right here also. And you can do this all day. And just by doing this ahead of time, you could see where the price will struggle once it gets to a certain area in price. So it was the first touch. So it came through, it came back down, touched, and then broke through after. But it was first rejected. Once again, previous wick, breakout candle's body. Came over. As you can see the touch. One. And the more times it touch, the weaker it gets. So like the first touch is always the most important because more than likely it's going to get rejected the first time it tries to touch it. This whole area, pretty much. So the first touch, you got rejected. Second touch, you got rejected again. These are all based off previous points and everything that the market struggled to pass and everything. Had a lot of indecision. So you can mark these up and everything all day, and you can have a lot of successful trades and successful entries and everything just by knowing these points at a market that it struggled to pass. Okay, so if you combine these with your support and resistance, and then it's gonna get very, very intense. But that's gonna be on our confluence trading video. That's gonna be probably next. So let's see what happens. What's going on, y'all? Quick video, just making this just to show you guys how to draw your trend lines. Remember, when it comes to technical analysis, it always has to be on point. Don't ever get lazy when it comes to your technicals. And when I say technicals, I mean as far as drawing your supply and demand zones, your trend lines, support resistance, anything that has to do with the chart technical analysis. Don't ever get lazy to it, because at the end of the day, that's all about accuracy. You know what I'm saying? Like, trading is all about accuracy, and if you want accuracy, you have to take time in your craft. Like, don't rush the craft. Take your time. So whenever an opportunity appears, whenever it actually hits one of these areas, these trend lines, these supply and demand zones, you know that the accuracy is going to be there because you took a lot of time and charted these very, very precisely. So I mean, don't ever get lazy. You know what I'm saying? Just take your time. It's gonna be worth it. You know what I'm saying? Because when you see these profits, you'll know why you did what you did at the end of the day. Okay? So just want to get it out there. Don't ever get lazy when it comes to your technicals. Okay, so this video is gonna be based off trend lines. Trend lines always wick to wick. So let me write something real quick. So point 1 and point 2 always has to touch wicks. Always. Point 1 and 2. Very, very important. Point 1, point 2. Or whatever. Okay? So what I mean by that is the first two areas that is touched when you actually draw your trend line, it has to touch wicks. Wicks. First 2 points has to touch your wicks. I would recommend you guys doing this on the 4-hour chart. The 4-hour chart, the 1-hour chart, and even the daily chart. You know, like, I like the 4-hour chart because, you know, like, it's a bigger picture. So you see the overall on what the market's trying to do. You see less wicks. So at the end of the day, the wicks that you do mark up on the 4-hour chart is very, very precise. So you can do it on a 1-hour chart also if it comes down to it. But as far as for your overall markup, you can just go on the 4-hour chart, daily chart, that kind of thing, and then mark it up because you see like a lot of less wicks. You see the wicks that really, really matter. But if you come down to it, you can put on your blue lines, like the blue trend lines or blue lines period. I do like for randoms, kind of like how I have right here for support resistance. These are my randoms, support resistance areas that I draw, just so it doesn't get confused with the main ones that I have to keep in mind. Okay, so see how right here I have these circles, all right? That's because I did a trend line like this. See how I'm at the bottom of this wick right here? Okay, wick to wick and drag into the future. So the first two areas, first 2 points, point 1 and point 2, has to touch the wicks. Beyond that, it doesn't really matter. This point 1 and 2 has to touch wicks. Okay, so point 1 is right here. Point 2 is right here. Okay. Point 1, point 2 right there, right? Perfect. And if I wanted to draw a trend line like right here, okay? Same concept. Point 1, point 2, drag into the future. Okay, just to show you guys a little bit. Okay, if I wanted to draw a trend line over here, I drew this one earlier, but I can draw it again. So what I'll do pretty much is find like the lowest areas. With trend lines, you're pretty much drawing it from either like as far as following the trend overall, like you're drawing from a higher low, a lower high, and then go on like where the trend is being directed overall. So if I wanted to draw a trend line over here, draw it from 1 wick, 2 wick, into the future. Yeah, sorry. So this right here is 0.1. Point 1 is right here. 0.2 is right here. Let me mark it off some more for y'all. Here. 0.1 and 0.2. The main important points when you're drawing your trend lines. 0.1, 0.2 into the future. Alright, and as you can see, it's being respected, respected, respected into the future. Alright? And remember, if your market was supposed to actually break this trend line, you would be looking for a what? Let's say if it broke down to like right here, looking for a retest, entry up here, and then drop. Alright, so if it breaks a trend line, completely breaks as far as crosses over it, and then makes a brand new candle within that same direction over it, you're looking for a retest, and then a continuation pattern, which is basically a sell. Alright, if it was the opposite direction, same concept, you're looking for it to actually break, retest, and then keep on going. Okay, so overall, that was a quick video just to show you guys how to draw your trend lines. Point 1 and 2 is the main points. Point 1 and 2 are the main points that have to touch wicks always. Okay? You could draw them on your hour chart if you need to, but for your overall markups, you could do it on a 4-hour chart or a daily chart, and then go from there. Alright? So see you guys on the next video, and catch some pips, man. Peace.